Hey there guys, I'm going to get into the stock market technical analysis video about today, show you guys what I'm seeing, and the price action of these candlestick charts is telling us something. So let's get into it, but before I do, again, give me that thumbs up. I really do appreciate it. If I can get more than 100 thumbs up per day, that's encouraging. It helps me continue to make these videos. I got to be honest guys, sometimes it is a grind to make these videos. And I'm not always motivated to do it, but you know, I just continued to stick with it. So just continue to help out with the channel. I do appreciate that. Let's get right into it. Here's the S&P 500 E-mini futures, and this is what happened today. So the market opened today bullish on the jobs number. It really, if you look at the fundamentals behind the jobs number it was kind of silly. Yeah, there was some jobs created. It's not really jobs created. It's jobs coming back to work. It's furloughed workers that happened the last month, and it's just kind of that reopening trade that continues. Workers coming back to work, but that information's in the past. And if you look at the weekly jobless claims, we actually had another over 1 million claims this week. So it's workers came back to work in the last couple weeks, and we're starting to see workers, lose their jobs again. So don't really read too much into the data, thinking that the headline is bullish and everything's great. Let's look at the charts. They'll typically tell us what the market really thinks of the data. Versus what the headlines and the news channels think of the data. So here's the E-mini futures. You can see today we were opening above resistance. Here's your resistance right here. It sits right about 31.45, and you can see we've tagged that several times here, and we opened above it, instantly crushed it down, sold it. They're trying to pop it back up, but I don't think we're going back above this today. I think we're going to close. We could close maybe at resistance or potentially below it. I don't think they're going to be able to recover that. So in general, resistance is still holding on the futures for the SPY. Nasdaq futures, they're at all-time highs, so there's not really too much to read into that. The Nasdaq's just running away, and there's just nothing bearish essentially on the futures. So let's look at the S&P 500 and see what's going on. You can see this morning they opened up way up around this 315 level, and I actually don't have that marked out, but if you mark it right about there, that's the high that we were at, that candle. We did another retest of that level, so you can see we're kind of range bound right now. We're stuck at 315.68 at the high, and the low right now is about this 350 level, 300 level. And that's the range that we're in. We're bouncing up and down between this range. So today, they gapped it up right at, they gapped it open and started to ran right into resistance, and it held and it rejected, instantly. And so basically we're selling off today. But then we've got support right at this 312. This is the level that it's been, we gapped right here. Here's the 312 right there. Held it right in here. When it broke down, it came right up to 312, tagged it, and then today sold right down to 312. So 312 held as support, and 315, 50, 60 held as resistance. That's probably the range for today. I don't think there's too much more going on. But the point is, we're still being held down by resistance. And now we zoom out to look at the larger picture. Just you can get caught up in the day-to-day bullish action or bearish action, thinking that this is going to be where the next week or month or a few months are going to go, when really it maybe is just one day. So we look at the daily chart here, and the daily chart still shows a different picture. To me, it shows an uptrend right here. This was your uptrend, your bear market rally potentially. I'm going to continue to go with the bear market rally story until I see, probably a break to the all-time new highs. Then we'll probably have to start thinking that through. But until then, we're completely within the parameters of a bear market rally. There's nothing that says this can't be a bear market rally. Go back and look at past bear market rallies from 2008, from the dot-com bust in 2000. Look at those. You'll see that this is what they look like. They get really close. They make it very believable, and then they eventually roll over. So we could still easily be within that parameter, and I think we are. So here's the thing. We had this uptrend here in the S&P 500. We broke the uptrend, and we've pretty much gone nowhere since we broke. Momentum is just flat. We're consolidating, trying to figure out where the market wants to go next. So you no longer have an upward trend. Yes, you do have higher lows and higher highs temporarily, but here's your high right here. So if you can't recover this high, you don't have that higher high anymore, and you have a low, and you potentially, if we make a move down and make a new lower low, then you could say at that point trend is broken. But what we do have to tell me that we will roll over and make a new low is we have this island top reversal right here. This island top reversal is still intact. Here's your cluster right up here. There was your reversal, and we had a kickback rally 1, another kickback rally 2. Still have not been able to even fill the gap. So that's completely possible. They could still run up and fill the gap, and maybe reverse and stop right there. That would be a nice little shakeout for any shorts. But again, we set our shorts right. We set our stop up here at the top. So going to the hourly, just to reiterate, the short, you'd want to stop out. If you start to recover the cluster right up in here, then that is not bearish. I mean, that is in that moment in time a bullish, momentum, but it should stop right there. It should not recover the top of the candle or the cluster. So basically, if we get a close above this 322.20, I don't think we can say that this island reversal is intact anymore. It will have been defeated or broken, and that will be a bullish. That will be bullish, and you should see movement higher. So that would put the bear market rally into question, seriously. So we'll have to watch for that. But as of now, still have not been able to recover even the gap right here. The kickback right here. They started to this is the recovery of the gap right here when they started to recover. They did another kickback. We were rejected today. So we'll see what happens. Next week could be the week where we start to roll over. Or it could be another. I mean, there's three things. Obviously, it can consolidate more. We could start to roll over, or we could run up and kind of negate this island reversal. Obviously, that's what the bulls want to see. The bulls want to see this island reversal erased. The bears want to see it hold. And in between, we're in a stalemate where we're chopping up and down. So that's it on the SPY. Here's the cues. I got a couple trend lines here that I was marking out. This one doesn't seem to be valid anymore. But this one right here could be valid, could be a longer term resistance line. If I go back to the weekly, I pointed it out in the video. Now, this is a weekly chart, so my line could be off slightly. If I roll into the daily, I do my best to kind of line it up, but it could be off slightly. And given that it's a big, long weekly chart and a line that was really a resistance trend line or channel trend that was spotted from the weekly chart, you got to give it a little wiggle room. It could be, it's adjustable slightly. So we could either be at it, just slightly above it. It's hard to say, but I think it's in the range of where you would expect to see this NASDAQ rally fail. And I say that because it's at resistance. That trend line has been resistance really for the last 10 years if you mark it out, and it's in the area. It might not be here, might be a little higher, but it's in the range where you want to start looking for the reversal in the triple Qs. So we'll watch for that. Until then, everything's still bullish. There's nothing to really short against. There's nothing to really be bearish against, only for the fact that there's the potential there. Let's look at the XLK, just to reiterate, same thing, same look. just a bullish chart on the daily. Held that support right there at 101.80 and is moving higher. So in general, just bullish. There's nothing bearish there. XLV, again, this thing has not been swing trader ETF recently. It's been more of a it's just choppy basically. It's really been tough to trade. That's why I've been out of this thing for a while. I caught the big downward short right here, and then I bailed from that and said I was going to wait for a nice clean break of this 96, it's about 96.80 level. A nice clean break and close below there, maybe 1 or 2 days. That should do it for a breakdown. Until then, we're just chopping sideways and consolidating, a lot like the S&P 500. Okay, and then the weak sector XLF rejected again today. So you can see we're chopping around the support line here. If I roll out, this is an hourly chart. You can see we've got a reaction low, another reaction, and then right as we zoom in, this is how we verify our trend line. We had a reaction right here that ramped up and held, and then we undercut it, and you can see all the back tests to this trend line. Today they popped it above and tried to do a fake out, make it look bullish, but it instantly rolled over and sold off. We're back below support. So that's bearish action. To see a recovery of a support line that is instantly rejected and failed, that's bearish. So financials are bearish in general. And that tells me that the market is, or the economy, I guess, is bearish, because you can't have a bullish economy if there's not credit expansion, which is lending essentially. Our economy is based on consumer spending, and our economy and country in general, we borrow money and we spend it, and that's the dynamic that our economy is built off of right now. So if you see credit contraction, bear markets are always created by credit contraction. And credit expansion obviously is what creates the bull markets. This is the cycle, the business cycle is what they call it, and it's a central bank cycle essentially. It's credit expansion, credit contraction. Yes, the Fed is expanding credit. The banks are not necessarily, and the financials are not showing that. So this is just something to keep an eye out for. But as of now, XLF is that's bearish. We're below resistance, and we should continue to roll over. And again, relative weakness in Walmart. Once again, the markets are up and Walmart's flat to down basically, just continuing to show relative weakness. Every single pop that Walmart has, it's sold into, and when the market is rallying, Walmart is not. And the reason why that is, for the most part, from what I can tell, is the market's rallying because FANG is rallying. The FANG has such a high weighting in the S&P 500 and the triple Qs that if FANG is rallying, then the market might be slightly up, when the rest of the market, the rest of the sectors are either flat or down. The markets can still be slightly up, the indices, because of FANG. So that's why Walmart is continuing to kind of show us the signs of the real economy and the real market. Whereas if you look at the indices, you might as well just look at FANG, because they are the ones that are making the market move higher. And so that's very narrow breadth. There's a very narrow breadth in the rally that's taking place, and that is typically a sign of a top when you have narrowing of stocks. And so we watch for that, and that's why I say when the FANG breaks and the market when tech breaks, the rest of the market should be very weak, because we're seeing weakness across the board in the rest of the market and only strength in FANG. So when FANG breaks, there's only weakness left, and so we'll watch for that. There's always potential for rotation, but as of right now, if FANG breaks, the market's going to break. Okay, we'll just run through. Here's Apple and Microsoft. Apple, still bullish. Nothing to really be bearish about temporarily. We do have bearish divergence, so it is set up for, we're losing momentum, but price is still moving up. So the loss of momentum just puts you on lookout for a break in trend, and now we just wait for the break in trend to trigger, to trigger that downside move. Microsoft, same thing. Microsoft's just kind of gone parabolic. although you can see we're losing momentum here from the previous high. So, here's your high, and then this high was made on lower momentum, and this high was actually made recently on a little bit higher momentum. So, but still lower from this previous peak. So you still have divergence, and it just sets it up for a break in trend. But again, you have to wait for the break in trend. And I've got it marked out down here at depending on when we get there, 199, 197. All my charts are logarithmic. Someone asked. I use logarithmic scaling, so that helps me. I think it's a more accurate way of charting the moves in the market versus using linear scaling. Linear scaling is what, Kramer on CNBC is going to show you, or what, it's what news headlines use to show you kind of an exponential bell curve or exponential move higher. But logarithmic scaling makes it flattens it, and it makes it more it just makes it easier to chart the actual support and resistance lines. So that's what I use. I got to point it out, even though I'm not in the trade, I got to point it out because I'm eyeballing this. This is a bear flag right here. So clear bear flag in DraftKings, and you can see it's just flagging out. A breakdown of this should set this in motion for another nice move down. Potentially, the measured move here would be about a 20%, 25% move down. You take the flagpole and you mark it out, and somewhere right in there, somewhere. My lines have been doing this weird thing. I haven't quite figured it out. But basically, you've probably got to move down to this, at least down to $25. That's where that looks pretty solid. Nice round number right there. Maybe something like that. So we'll watch for that. If there's a breakdown in the flag, which could happen today. I don't think it's going to happen today. And if it does happen today, I wouldn't take it if it was just a marginal breakdown, because it's a holiday weekend. It's basically a Friday. Not too interested unless we get a big breakdown in the markets. We get some headline or catalyst, but something to watch there. So I'm going to keep an eye on that and let everyone know what I see. I'm also watching this Redfin. We have negative divergence here, right there. And but we have an upward price channel. So all we need is the breakdown of the channel or the trend line here, and that would be your sell trigger. Probably going to come in the form of a gap down, but again, maybe it comes into your market. But again, we're just looking for that breakdown, and when that breakdown comes, that's a sell signal, and that should set us up for a move lower. And we also have negative divergence in the PPO right here. Here's another real economy stock, and this is something that I'm also interested in owning this one long term. However, not here. They did cut their dividends, so that's a good positive sign. Looking for some sort of another technical signal, but this is fun. Cedar Fair, they're basically like Six Flags. They own amusement parks, and you can see we had, here's your bear market rally. This is the beginning of a bear, this is your bear market first impulsive drop. Nice rally here, but we've now broken that trend. Here's your trend break. You had 4 reactions, 1, 2, 3, 4. You broke, and we're working our way lower. So, and we're also riding this trend line down. So the trend in this one is down, and this is a real economy stock. So just something to look for to see, if maybe this eventually really breaks and flushes out. We break below the lows here of $12.99, and at that point we'll start looking for bullish divergences and entries. But you can see, here's your weekly chart, and a nice impulsive flush all the way down to here. What I'd expect is, here's your 2009 lows. If we're going to get a bear market rally, we're probably going to undercut the 2009 lows on this one, bringing us back down to these levels here, $5 or so, and that's probably your entry point for the long-term entry. I don't know if we'll get there or not. That's a long ways down, but it's possible. Yeah, I just have to keep watching this. And as of right now, we have a downtrend, so we're just going to keep watching it. The thing that gives me pause on it falling a lot more is the fact that they've already cut the dividend. So because they've cut the dividend, maybe we have a little bit more downward movement, and then maybe we break this downtrend and start to move higher. So a breakup would be bullish. That might be a good entry. Until then, we're in a downtrend, so we'll just keep watching this one. All right, guys, here's your gold. Obviously, so gold is moving slightly higher, but we do have, this is gold bullion. We do have negative divergence in gold right there, and I don't like that. That does not look bullish. Here's a big divergence right here. This is the daily chart. So we have negative divergence in gold. Even though the price is moving up, the momentum is starting to fade. And we are at major resistance right now too. So if you look at the weekly, here's major resistance right there at 1790. It's about 1790. I'd expect we overshoot it just a little bit and then it fails. But here's the thing. Here's what I'm looking at. Longer term, gold's in a bull market. These negative divergences might play out for a drop of gold down to trendline support. So here's the trendline support that I have as of right now. If we drop down to, depending on when we actually get there, in the past I was saying 1570, but I don't see that being in play anymore. Now it's going to be higher, 1600, 1650, depending on when we get there. But that would be the area that I'd be looking to buy gold for the next move, really to all-time highs. If we get a move down there and that holds, then the next move up should break the all-time highs and really set us up for a nice run higher. So that's what I'm looking at there. Here's GDX. Miners still in an uptrend. You can see it's, something like that. It's not, maybe we break it down to the low here. Yeah, it's not the cleanest chart. Something like that maybe. Don't have a whole lot of reactions there. But, we're working our way higher. We also have negative divergence in the GDX. And I've got resistance there at the high at 37.52. See if we get anything else there. Yeah, just 37.52 there on the high. And that does line up with this cluster reaction back here. Let's see if it makes any more sense. Little bit of cluster right there where it broke and then was rejected. This was basically rejected right here. You see this nice big plunge right here? Let me zoom in just to show you. Nice big plunge. You can see it was rejected right around the level we're at, and that's what kind of started the bear market, this big move down. So we're at major resistance is the point that I'm trying to make. Here's Barrett Gold. Bearish rising wedge now. We've had several reactions on the support and resistance. So we got a bearish rising wedge. We have negative divergence. Yep, that's there. Not in the RSI though. I don't see it on the hourly. Might be on the daily. Let's look at the daily real quick. Not in the daily either. So not a ton of negative divergence, but a little bit there in the PPO. And we have a bearish rising wedge. So we're working our way, grinding up the wedge. I don't know. This is set up to be bearish and for a breakdown below out of the wedge. So if that does, probably going to come back down and test this $20, this $20 range, and maybe hold support there. AEM, this one, I saw this morning. We were up here above this wedge, this bearish rising wedge. We were trading above it. That looked like a pretty clean area to sell because, again, we were above the wedge. And sure enough, closed the first hour. You can see why these trend lines matter. We were above it, but that hour could not close above it. We closed right below it, and then the next hour was a nice impulsive selling. So that sets us up at least to come down to the bottom of the wedge, which should be support, and possibly break this breakdown. If we break down, then I see us back testing this support line all the way down here at $56. or depending on when we get there. So I'll be looking at that one. That would be an area that I would definitely be interested in buying this, because that should hold as support. I don't know if we'll get there, but maybe we'll get close. We have to just take it day by day and watch it. And let's look at the US dollar. I haven't looked at this one for a while. The dollar, just kind of chopping sideways. Basically, looks like we're just flagging for another move down. That's what it looks like. But we've got major support. Here's your support right down here. This goes back on the daily chart years, and you've got lots of support along that trend line. So we, for a sustained bearish move down in the dollar, you'd need to see a break of this longer term support line. A breakdown here would set us up for a new bear market in the dollar. That's all I got, guys. The market's closed tomorrow, and there's probably not anything else that's going to happen this afternoon. So I will be back on Monday, as I'm going to be out of town this weekend. Take care. Thank you. Leave me a thumbs up or a comment. Talk to you on the next video. Bye.